Welcome to the Deep Dive, where we sift through the latest developments to bring you the knowledge that truly matters. Today, we're setting our sights on Bitcoin, but maybe not quite as the digital gold we've all come to know. The ecosystem is really in the midst of a profound transformation. It's evolving beyond just being a store of value. It's starting to embrace a multi-asset future. We're talking about completely new forms of liquidity, new financial capabilities being built directly on and around Bitcoin. And this is being driven by some key innovations, especially from the LNFI network and the stablecoin giant, Tether. This isn't just a minor tweak. It feels more like a strategic pivot, one that could really redefine Bitcoin's role in global finance. Okay, let's unpack this. Let's explore what's truly changing here.
What's fascinating here, and what our deep dive today will hopefully reveal, is how this confluence of technical breakthroughs is shaping this whole new chapter for Bitcoin. Our insights today are primarily coming from a Cointelegraph press release that's dated August 29, 2025, detailing these, pretty groundbreaking advancements. So our mission is to connect these dots for you. We'll break down the foundational tech, things like RGB and Taproot Assets. We'll introduce the key players involved, and most importantly, try to explain the practical implications these changes hold. So whether you're, say, tracking the crypto markets, or maybe you're building in this space, or perhaps you're just intensely curious about where digital finance is heading, our goal is to give you a clear, concise understanding of this really rapidly evolving landscape.
And there is definitely a lot to dissect. Let's start with a really significant market event that happened recently. On July 25, 2025, the LNFI network's LN token made its public debut on Binance Alpha. Now, for anyone who follows this space, placing a token on a major top-tier centralized exchange like Binance Alpha, that's always a big deal. But this wasn't just any token. It actually marked the very first time a Lightning native asset achieved that kind of listing. That's a landmark moment, really.
Right, and maybe we should clarify what Lightning native asset means exactly.
Good point, yeah. We're talking about digital assets that are explicitly designed to operate on the Lightning Network, which, as you know, is Bitcoin's high-speed, low-cost Layer 2 payment protocol. These assets don't just sort of bridge over from some other blockchain. They're built to inherently leverage Lightning's instant settlements and, crucially, its minimal fees. And this wasn't an overnight thing either. This debut was really the culmination of an intense 18-month development cycle. During that time, LNFI was strategically positioning itself as, and this is their term, the financial backbone of Bitcoin's emerging multi-asset future. So imagine a brand new asset class born on this fast secondary layer of the world's most secure decentralized network, finally getting mainstream access through one of the biggest gateways.
Yeah.
That sends a powerful signal to the market.
It really does. And to fully appreciate LNFI's debut, we really need to understand the powerful technical foundations that this new era is being leaped on. It's not just one single innovation. It's more like a dual-pronged approach, leveraging two distinct but importantly complementary standards.
Okay, two standards. What are they?
So first, let's talk about RGB. This standard was released to mainnet on July 17th, 2025. RGB basically stands for Client-Side Smart Contracts. Now, I know that sounds technical, but let's break it down. Imagine you have a confidential digital agreement, maybe transferring a specific token. With RGB, the complex parts of this agreement, the smart contract logic, are largely verified and executed directly between the participants, on their client-side devices, rather than being broadcast to every single node on the main Bitcoin blockchain.
Okay. So it keeps it off the main chain mostly.
Exactly. This process significantly reduces what we call the on-chain footprint. It means almost no data needs to be stored on Bitcoin's main ledger for these kinds of transactions. And the result, incredibly low fees, much better privacy, and high efficiency for asset transfers. Think of it like building a secure, sort of private express lane right on Bitcoin's superhighway, and the vehicles, your tokens, are privately inspected and validated just between the sender and receiver, without clogging up the main traffic.
That makes sense.
And the real kicker here. On August 28th, 2025, Tether, the issuer of USDT, the world's biggest stablecoin, announced it would launch USDT on RGB. They specifically mentioned leveraging RGB's BANTL 1141 release. This is massive. It brings a major stablecoin natively onto Bitcoin's infrastructure, which really validates the power and security of RGB's approach.
Wow, okay. USDT on RGB via Bitcoin's layers. That's huge. So if RGB provides this private, efficient, smart contract layer, what's the other side of this dual approach you mentioned?
That would be Taproot Assets VSOM.6. This was shipped by Lightning Labs in late June of this year, 2025. Taproot Assets embraces a very similar low-fee philosophy to RGB. It wants things to be efficient. However, its primary focus is maybe a bit different. It's designed as a highly developer-friendly toolkit. The goal is to make it really easy for creators to issue and manage assets directly on Bitcoin. It's built on Bitcoin's Taproot upgrade, which itself brought privacy and efficiency gains, and crucially, it's already integrated into multiple wallets, which helps with accessibility.
And Tether's involved there too.
Yes, exactly. Just like with RGB, Tether had actually already confirmed its integration path for USDT with Taproot Assets and Lightning earlier in 2025. So it's really crucial to understand these aren't like rival technologies fighting each other. Not in the traditional sense. Think of them more as two powerful, complementary approaches. Both are driving towards the same fundamental goal, enabling efficient, secure, and native asset transfers on Bitcoin's second layer. If we connect this to the bigger picture, what we're witnessing is this strategic, multifaceted effort. It's about bringing a whole new class of financial instruments directly onto the Bitcoin network, fundamentally expanding its utility beyond just holding value.
Okay, so we have these two powerful distinct standards, RGB and Taproot Assets, emerging to really supercharge Bitcoin's capabilities. It's like a fantastic foundation. But what makes LNFI uniquely positioned here? How are they bringing these together and making them accessible?
Yeah, that's precisely where LNFI carves out its specific niche. They are highlighted as the first platform to actually integrate both RGB and Taproot assets side by side. This dual integration, it offers a significant advantage, especially if you're an asset issuer.
How so?
Well, it grants them the flexibility, you see. They can choose either protocol based on their specific needs, maybe they prioritize the unique privacy features of RGB, or perhaps they lean towards the developer friendliness of Taproot assets. And they can do this all while operating without ever leaving Bitcoin's trust boundary, which just means they're leveraging the unparalleled security of Bitcoin itself. That's paramount for any serious financial application.
Right, using Bitcoin security is the key benefit.
Absolutely. And now with USDT on RGB v0 Pay 1.1 officially in motion, LNFI has positioned itself as a unique first mover. They claim to be the sole platform currently providing a unified venue for USDT across both Taproot Assets and RGB. To be specific, their support for TA-USDT, that's Taproot Assets USDT, has been live via their LN Bridge product. And LNFI is also a named partner for the very first RGB bridge, specifically bringing USDT liquidity onto Lightning. So this strategic unification, it really positions LNFI as a critical hub for stablecoin activity on Bitcoin's second layer. It simplifies the complexity for users and issuers alike.
Here's where it gets really interesting then. It sounds like LNFI is acting as this central junction point, but it seems like a lot of these innovations are coming together quite fast. How ready is the broader Lightning Network itself to handle this kind of multi-asset growth? Are we just talking about theoretical potential here, or is the infrastructure genuinely robust enough for this kind of scale?
That's an excellent question. And the answer, it points towards significant maturity, actually. The broader network seems absolutely ready to scale for these new capabilities. Public Lightning Network capacity, for instance, recently crossed the 5,000 BTC mark. That's a significant milestone.
5,000 BTC.
Yeah.
Okay, how significant is that really?
Well, 5,000 BTC might not sound like a huge number in the grand scheme of, say, Bitcoin's total market cap. But Bitcoin Magazine described this milestone as evidence of the network, quote, slowly gaining popularity. Now, that phrase, slowly gaining popularity, often, it belies the underlying exponential growth you see in nascent tech. What it signifies is a steady, organic accumulation of trust and capital. It indicates the network is maturing, becoming more resilient, offering more routing options. This isn't just theory. We're seeing measurable, tangible growth and adoption that's making all these advancements practical.
Okay, so real growth is happening.
And furthermore, LNFI's own routing cluster. It ranks impressively in the network's top 11 by capacity. A routing cluster on Lightning, it's essentially a collection of nodes that help facilitate payments across the network, like a highway interchange. Being in the top 11 means LNFI operates a major interchange within the Lightning network. A sizable share of high-value payments already hops through its nodes. So that demonstrates not just theoretical capacity, but current, real-world utility and adoption that's expanding fast.
That's a really clear picture of the network's readiness. Makes sense. So with all this activity and growth happening, how does LNFI ensure continued participation? How do they incentivize people to actually use and build on its platform?
Well, that brings us to the LNN tokenomics.
Right. They're specifically designed, as the source says, to fuel 3 core mining mechanisms that reward real activity across the Lightning ecosystem. Let's break those down. First, we have channel mining. This mechanism rewards users who connect to Lightning, provide liquidity and self-custody assets through LN nodes. Think of it like this. You're basically getting rewarded for contributing to the health and the flow of the Lightning Network itself. By opening channels, providing liquidity, you're making it easier and faster for payments and assets to move across the network. And the tokenomics are designed to compensate you for that essential service.
Makes sense. Rewarding infrastructure providers.
Exactly.
Yeah.
Next up is trade mining. This incentivizes active trading on their LN exchange platform. It rewards activity on both spot and perpetual markets. For those maybe less familiar, spot markets are just where assets are bought and sold for immediate delivery. Perpetual markets allow trading of derivatives that never expire, offering leverage and continuous exposure. So if you're actively trading on their platform, whether it's simple spot trades or more complex derivative strategies, you're rewarded for generating that liquidity and volume.
So rewarding actual market activity.
Precisely. And finally, there's PayFi mining. This mechanism is aimed squarely at driving global adoption. It does this by rewarding real payment activity across the Lightning Network. Essentially, you get rewarded for actually using Lightning for payments in the real world. This could be anything from buying a coffee with Lightning to maybe larger merchant transactions. These three mechanisms together, they show a pretty thoughtfully designed token. It incentivizes beneficial participation, liquidity provision, and robust growth across the entire ecosystem. It aims for that virtuous cycle of adoption and utility.
Yeah, and building on that, these new developments are creating really unprecedented broader accessibility, and they're accelerating market activity on multiple fronts. The Binance Alpha listing, which we touched upon earlier, that provides market participants with a regulated, sort of easy-to-access on-ramp into the whole LN ecosystem. That's crucial, for attracting both retail and maybe institutional interests that might be hesitant to engage with purely decentralized avenues.
Right. The regulated gateway is important.
It is. But beyond that centralized exchange access, we're seeing significant acceleration in, let's call it, on-chain or layer 2 activity. LN Exchange, which has established itself as the first and largest order book in Bitcoin Lightning Network, has already surpassed an impressive $8 billion in trading volume.
$8 billion. Wow.
Yeah, $8 billion. To put that into perspective, that volume places it squarely among Bitcoin's top-tier exchanges overall, which is a remarkable feat for a platform operating predominantly on a Layer 2 solution like Lightning. So these various channels, from regulated CEX listings to this burgeoning decentralized exchange activity, they collectively signal growing demand and broader accessibility for Lightning-native assets. It confirms this is far more than just hype. It's a rapidly unfolding reality.
Okay, so pulling all these threads together then, let's think about the practical takeaways. For the different types of people in this space, what does this all mean? Whether you're maybe a seasoned Bitcoin pragmatist or an active trader, or maybe just keenly observing the future of finance.
Yeah, let's break that down.
Okay, so for the Bitcoin pragmatists out there, this is particularly significant, right? Because the key takeaway seems to be that Bitcoin's original battle-tested security model can now effectively host high-frequency finance. And critically, without needing foreign virtual machines or wrapped assets.
Exactly. Maybe explain those terms quickly.
Good idea. So foreign virtual machines usually refer to other blockchain networks like Ethereum's EVM that executes smart contracts. Using them often means trusting a different security model than Bitcoin's. And wrapped assets, well, they're essentially tokens that represent an asset from another chain, like wrapped Bitcoin on Ethereum. They're pegged, but issued on a different blockchain. This can introduce extra risks, like counterparty risk with the issuer or vulnerabilities in the bridge connecting the chains. What we're seeing here is a move towards native integration, leveraging Bitcoin's own security without these external dependencies. That's a huge deal for those who prioritize Bitcoin's security ethos above everything else.
Absolutely. It keeps things within Bitcoin's trust boundary, as they say.
Right. Now, what about for traders? What's a big advantage?
Well, for traders, this is also incredibly important. It means, and this is a quote, hyper-liquid style execution now exists in an environment where block reorg risk is effectively zero.
Okay, let's unpack that one too. Hyper-liquid style execution.
That refers to the very fast, low-latency trading environments you see in traditional finance or on specialized crypto derivative platforms. It's crucial for high-frequency trading strategies. And block reorg risk, that's the, albeit small, chance that a recently confirmed transaction on a blockchain could be reversed if the network briefly disagrees on the longest chain.
Okay. Like a transaction getting undone.
Precisely. While it's extremely rare on Bitcoin's mainnet due to its immense proof-of-work security, it's still a theoretical possibility, especially in the first few confirmation blocks. On Lightning, however, especially with these native assets, the finality is incredibly high. Transactions are almost instantaneous and practically irreversible. This offers a level of transaction certainty that's absolutely crucial for high-speed financial operations. Think of it like pressing save on a critical financial document with absolute provable certainty it can't be undone or reversed moments later.
Got it. So speed and certainty for traders. That's
Yeah.
compelling. And then for the wider ecosystem, what about issuers, developers, node runners?
For them, whether you're an issuer thinking about your first token launch, maybe a developer building new applications, or even a node runner looking for new revenue streams on Lightning, this recent LNFI listing on Binance Alpha and the underlying tech like RGB and Taproot Assets, it's a very clear signal.
A signal of what?
It's a powerful indication that Bitcoin's next wave of liquidity, especially for these new types of assets, is likely set to route directly through innovative rails like those LNFI is building. There was an analyst covering the Binance Alpha debut who summed it up very pointedly. They said, when Bitcoin traffic shifts to Lightning, all roads through Lightning lead to LNFI.
Wow, that's a strong statement.
It is. It really highlights LNFI's current leadership position in this specific emerging niche. It shows just how quickly they've managed to cement their role.
So it really feels like this marks a monumental shift in the whole Bitcoin narrative then.
I think so, yes. The convergence of these powerful complementary technologies, RGB and Taproot assets, the emergence of these unifying platforms like LNFI. And crucially, the deep integration of major stablecoins like Tether's USDT. These are fundamentally transforming Bitcoin's capabilities. And also its perceived role in the global financial landscape. This isn't just about making Bitcoin transactions a bit faster or cheaper anymore. It's really about expanding its utility far beyond simply being digital gold. While, and this is the important part, crucially maintaining those core security principles and the decentralization that have defined Bitcoin for so long, this raises an important question, I think, that we should all probably be considering.
Okay, let's hear it.
And that question for you, the listener, to ponder is this. How might these advancements truly redefine what a Bitcoin native economy looks like, say, in the very near future? If high-frequency finance, if major stablecoins can now genuinely thrive directly on Bitcoin's layers, without compromising its core security, without needing those foreign virtual machines, what entirely new use cases, what potentially groundbreaking economic models might emerge that maybe we can't even fully imagine today? Just think about the implications for a second. A global, permissionless, high-speed financial system, fundamentally anchored by Bitcoin security. One capable of handling everything from tiny micropayments all the way up to complex derivatives trading. How might this impact the broader financial landscape? Not just within crypto, but potentially across traditional finance, cross-border payments, maybe even the future of sovereign currencies. It's certainly a lot to consider, and we definitely encourage you to keep exploring these fascinating possibilities. Thanks for joining us for another deep dive.